Finance and investing is one of the biggest niches that you'll find nowadays. From the likes of Luke Belmar all the way to Graham Stephan, there's a massive range. So in today's video, I'm going to be going over the 7 worst investing mistakes you can make as a beginner. The first one we have is not diversifying your portfolio. Do not put all your eggs into one basket. Invest in different sectors. The world's a big place and there's so much diversity. Don't just invest into one set asset class. For example, when I started investing into cryptocurrency is one of the most volatile assets we have today. There were literally so many cryptocurrencies I could have invested in. One of the big ones was XRP. They had a lot of technical indicators suggesting that it was going to go bullish. Just because I was aware of these technical indicators and my own biases, whether I was a fan of the software and a fan of the team, doesn't mean that I shouldn't put all my things into one basket. So I decided, okay, I like XRP, so I'm going to put some into XRP, but I'm going to put some into VeChain, which was another project I was passionate about. When you invest into one thing, you're limited because let's say you want 12% growth in an asset, you need that one asset to do 12%. Whereas if you had 3 different assets doing 4% growth, that is much more sustainable and less pressure. The second mistake investors have is trying to time the market. So they're trying to be able to predict exactly when things are going to happen. Definitely suggest to focus on a long-term strategy as opposed to basically day trading. I do believe 80 to 89% of people fail in day trading, and I've been doing that for a couple of years now, so I wouldn't tell everyone to go into it. Sometimes the best strategy is the long-term strategies. Third mistake that investors make is investing in the things they don't understand or they don't believe in. I did not believe in Dogecoin, so I didn't heavily invest into Dogecoin. I was part of a group of traders where they actually made a significant amount of profit from Dogecoin, but because I didn't believe in it personally, I didn't invest in it. Now, yes, I did miss off on a lot of profit. As you can see, Dogecoin went to the moon. However, I'm still happy with the decision I made because I didn't actually believe in it. I didn't understand the mechanisms of the project itself. If you don't fully understand something, don't immerse yourself into it. If you don't understand how to box, don't try box.
Pascal and also cruiserweight contender.
I'm just stepping for the. Oh!
If you've never played football before, just don't try and play football on a professional level. Understand a certain investment, don't take high stake positions acting like you know it when you don't. The fourth mistake is not having a plan. A lot of investors actually don't have plans for their positions, so they don't have a 1 year, 5 year, 10-year plan. Comment down below any investor who's got a significant amount of capital and raised it through the normal means without having a plan. I don't know any investor that's done that. The fifth mistake investors make is high risk investments. Just avoid them altogether. If you can't afford it, don't try to leverage that position. If you're not experienced enough, don't try to leverage that position. Don't have the network, don't try and leverage that position. Andrew Tate's videos, he goes on about the benefits of having friends and a network. And his friends predicted that the Russian currency was about to drop. So what did he do? He bought millions and millions of Russian currency because when things drop, the quicker they drop, then the faster they're going to bounce back, especially in the currency world in terms of recessions and stuff like that.
Bunch of money on the Russian ruble. $30-40 million I made. I knew the ruble was going to go up. That's an all-time high now. On a currency to get a 3x, it's nearly unheard of. The average person is not sitting around having conversations about the war in Ukraine, the Russian ruble, and the financial impact of the war. Me and my team and my network, we're different.
That's simply just of having a network. But at the end of the day, if you do not have that network, if you don't have that inner knowledge, don't try and leverage a high risk position. It's just never going to work. I have friends personally that I've lost 5k, 10k. Heck, I've even lost a lot of money myself from trading back in the day. So I would definitely tell you from experience, high risk positions, just always avoid them. I'll say number 6 is don't obsess over your losses. It's a long-term game. It's not about how much you lose. It's just about how much you make, keep, maintain. Things generally take a temporary dip, whether it's the housing market, whether it's the forex market, whether it's the stock market. Every market tends to dip, but whether you can be there patiently sitting there to watch it rise is a different case. Because if you're patient and you're there for the long-term gain, then those small losses won't mean anything. Because if you've gained 150% over a 2-year period, over a 5-year period, over a 10-year period, those small losses that you had yesterday or a week ago are just not gonna matter. Lastly, don't trade with emotions. It's a stupid thing to do. I'm talking from experience. When you've got losing positions, you try and stack them, you just lose more money. Or when you're trying to predict and you really need that money because you've put like 3% because you've over leveraged and you need to win, and you start getting upset because it's not going to happen and then you lose. You do not want to be in a position like that because it's going to affect your long-term thinking. Lastly, I would say think about it like this. If you had responsibilities, would you take them positions? So if you were a father and you had like 3 kids, would you take those high risk positions? That's how I think about it. And the more, or if you had to upload every single time you take a position to the public and tell everyone about your position, would you take those high risky positions? You probably wouldn't, because you don't want to embarrass yourself, right? You don't want to let everyone know that you're making poor decisions. If you can avoid making decisions that aren't emotional, you are going to be a good investor, just hands down. Thanks for watching, guys. Be sure to like and subscribe for more investment and finance videos. We on the moon, baby!